Hey everyone, today we're talking about becoming protected. Isaiah Goodman here, Chief Financial Advocate of Becoming Financial. Today what we're talking about becoming protected is specifically around HSA, Health Savings Account. There's a ton of questions about how they work, who's eligible, so I hopefully just wanted to clear up a few ideas for you around an HSA. Number one, who's eligible? Everyone, except if you have a low deductible healthcare plan. So specifically tied to an HSA, a health savings account, you have to be enrolled in a high deductible healthcare plan. So there's certain thresholds depending on whether you're married or your family's enrolled, but essentially if you're in a high deductible healthcare plan, it means that you're paying a higher deductible when you have to go to the hospital or you have to pay for your healthcare services. And so what is incentivized essentially by the government is you're saving money on your own in a separate account to be prepared for those expenses. This means that your premiums now are lower. We've talked about this in other episodes about cash flow maximization. You can do a high deductible healthcare plan, partnering with an HSA, and this can actually provide some tax efficiency, and you can also increase your take-home pay. So some options there in terms of what you want to do. But number one thing, as long as you have a high deductible healthcare plan, no matter what your income, age, everything, you can participate. Next big thing, you can do up to $6,900 per year as a family, up to $7,900 if you're 55 or older. So what this means is you can set aside almost $7,000, $8,000 pre-tax. Why this is important is it grows without taxes and it comes out without taxes as long as you use it for healthcare. It's basically the only instrument or the only entity, being or type of account that doesn't get taxed for a specific purpose. So even like a 529, it's tax-free if you use it for college, but you had to pay taxes on the front half. Something like this, you're able to use it the whole way along, tax-free, as long as it's specifically for healthcare. The next thing I really like about a HSA is that it rolls over from year to year. If you've ever heard about a flex spending account, the kind of the mad dash in November and December to get your glasses and get your healthcare appointments in, all that sort of stuff, because you have to spend it, right? Either you spend it or you lose it. An HSA rolls over from year to year to year. So let's say you've had a few years, maybe 3 or 4 years, where you didn't need much medical expenses or assistance or anything like that. Well, each year it keeps adding up and growing. You can actually invest the cash into assets and it can grow in the stock market. So a lot of big benefits there. What I'm seeing some clients starting to think about is, hey, if I set aside a few thousand a year for 30 years, I can actually use this as a healthcare sort of bucket in retirement. It's all tax-free. Really good planning. Last thing, just sort of a important thing to keep track of for an HSA, you do need to keep track of your actual healthcare expenses, keep receipts. So if you're not a business owner, it's going to be kind of different for you. You're going to actually have to manage and keep track of all your expenses. But if you go to the doctor, get a receipt, send that into the HSA provider, and they'll either give you a refund, or some HSAs will actually give you a debit card that you can use right at your healthcare clinic or right at your dentist, whatever is sort of an eligible expense. So a few big recaps for you. HSA, you're able to use that, get that money taken out pre-tax. It grows tax-free and it comes out tax-free for healthcare. It rolls over every year, but you do need to make sure that you keep track of it as long as it's for healthcare expenses.